Hi there everyone, you've tuned into ET Now, and this is part of our special programming. We're calling it ET Now at SIAM, and yes, it is one of the industry's biggest automobile conferences, and of course Deepshika, it's your first time here, so is mine, and we've had a great time meeting people, attending these insightful sessions. Extremely engaging it has been. How about you? I mean, what are going to be your top takeaways from today?
Right, so it's been a chock-a-block day in terms of the management who have attended, as well as the ministers who've come in and given us really insightful tips as to how we will see the future of the mobility of this company.
Absolutely. In fact, mobility, specifically e-mobility, has been the biggest talking point of today. We've had a whole host of experts, a whole host of industry stalwarts, and even a lot of people from the government talking to us about the same. But among that, we did manage to catch up with a whole host of leaders from India, especially from the automobile space. And Abhinabad Das was also with us, and he managed to catch up with none other than Pawan Goenka of Mahindra and Mahindra. And here's a slice of that conversation where they talk about the industry, how the different trends are playing out at this time of this point of time, and what lies ahead for automobiles within the Indian market. Let's have a listen.
We did expect July, August to be somewhat subdued because last year was just after GST. So last year June was very bad, and then July, August were unreasonably good because of GST, and it's a little bit of base effect. Yes, flood and everything is affected. So we had kind of said that we want to wait till September, because September will determine the real strength of the economy, of the industry, not the July and August month. There is no reason on the ground for us to be concerned. Yes, of course, there are many factors that are going on. The commodity price increase is high, but more or less it's sort of absorbed by the car makers. Not too much has been passed on to the consumer. Interest rates have gone up by 50 BPS, which I think is not a worry. Exchange rate is a psychological worry, not affecting the buying. Fuel prices are a bit worried, but on the other hand, there are many positive factors. The factor on the GDP, 8.2% was very positive. 13% growth in manufacturing, very positive. The rural economy, the MSP, the monsoon, very positive. So I think overall the positives outweigh the negatives. So I would expect...
Yeah, but given the fact that tractors, CV, you expect them to outshine, given the fact that the rains have been good, rural demand will be very strong this time, and GDP will be a big driver.
Yes, of course, and that's the reason I had mentioned this earlier also, that the July-August month for tractor will be not a very good month, because last year, compared to last year, because last year the festive season was a month sooner. And this time Diwali is very late, as you know, and therefore the whole thing is shifted by a month.
Yeah.
And therefore you would see that this quarter in tractor industry will actually be a degrowth, which is not at all a surprise to us. But the next quarter you will see a very big growth.
In terms of margins, I mean, rupee has been on a free fall, commodity prices, the way they're playing out, what should be the kind of impact that you see?
Well, I mean, obviously, when you have an exchange rate or rupee dilution, there is a negative effect, just as a business, I'm saying, only as a business. The other macro impact that it has. But there is an input cost that goes up because of import or indirect import, and there is an higher revenue that we get from our sales. Now, it so happens that for Mahindra, it's almost even.
Okay.
Almost even, right? So rupee going up increases my input cost by significant amount, but the same thing I get back in my export revenue. So we don't see much of a direct impact, but of course it is affecting the input cost. The commodity prices are going up, some because we are importing, and some because the Indian prices go up even when the exchange rate goes up, because they maintain parity with overseas prices.
And Dr. Goenka, how do you see the fuel prices play out? Because that again is a bit of a concern for the industry as a whole. Fuel prices.
Fuel price. Yeah, I think right now it is on the higher side. And what I had mentioned at the beginning of this year, that up to 70-75 crude price will be okay. Beyond that, it's going to start pinching. We are right at that sort of top of the 70-75. And if it goes to 80-85, then I think there will have to be some consideration, in my view, to see if there should be some relaxation in taxes to compensate for higher prices.
Marazzo looks like an exciting product. The pricing has been very aggressive, looking to win back lost market share.
Well, as you can see that when somebody says Marajo, I get a smile on my face because it really has been a very well received product. Of course, it's only 3 days old, and 3 days is not long enough for us to celebrate, but the initial reaction has been very positive. Everybody who has seen that, media, the customers, the dealers, the analysts, everybody is very positive on what the product will be.
You've been one of the first movers into electric vehicles. How do you see the market shaping up? Because at the end of the day, there are many obstacles right now for EVs. I mean,
well, see, I have lost my credibility in this because I've been saying for many years that we are just about to take off. And therefore, I will say the same thing again. But I don't think anybody believes me anymore when it comes to electric vehicles. But I have reasons to think that maybe this time it is real. And the reason I'm saying that is that the Farm 2 scheme, from what I understand, has been approved at the highest level. I'm also told that the Honorable Prime Minister may announce the Farm 2, though there is some uncertainty about it, tomorrow in the MOVE Summit. And that kind of shows, and the fact that it is a 5-year scheme and not a 1 year, 2 year, so that gives stability. And that's what many players are looking for, this stability. And most important thing is that they are talking about putting money behind charging infrastructure. So if I look at all of these things and look at all the state governments' policies that are coming out, and look at all the ministers today also, both the ministers talk about electric vehicles. I think we are almost there. Okay, just getting to that tipping of scale. We are almost there, and I had mentioned that if this year we don't start seeing a ramp up on electric vehicles, then we might as well not talk electric vehicles. So I want to give ourselves as a country, not as Mahindra only, as a country till March 2019.
Okay,
and hope that by then we get
looks like a stiff target actually.
I'm sorry?
Looks like a stiff target.
Not really. See, ESL, the 10,000 vehicle order to two players, that I think will do a lot in terms of bringing visibility and credibility to electric vehicle. And at present we have at least 15 fleet operators who have bought our vehicles in small quantities, 5, 10, 15, 20, and they are all pilots. Now, if the pilots succeed meaning commercially as well as technologically, then of course the ramp up can be very fast.
So is the business viable only with government incentives and subsidies, at least for the next 5 years?
I would say at least for the next 3 to 4 years. Because the battery prices have come down, but not enough to make the electric vehicles self-sustaining. And as you can make out that in India, the use of electric vehicles will not be in personal mobility space. It will be more in commercial mobility. And therefore, for commercial mobility, it has to be an absolutely commercial break-even. No fleet operator is going to buy electric vehicle because it's a nice thing to do. They'll buy it only because it is less cost per kilometer for them to run. And we are, I think, about that much away now to get to that level.
But one thought is also that maybe let the market decide. Why are you thrusting a technology on the people? I mean, whether it's EV or hybrid, ethanol, I mean, the consumers are smart enough to figure that out, right?
No, I have slight disagreement on that. I'll tell you why. See, when it comes to whether to give, let's say, an air conditioner or not, that consumer should decide, because it's up to the consumer to know whether. But when it comes to making the car safe and making the car clean, you cannot let the consumer decide, because an individual consumer is not going to pay for making the car clean, right? An individual consumer may not value safety, because we all believe that the accidents happen to somebody else, it will never happen to me.
Sure.
And it is the role of the regulator to ensure that our cars are safe and our cars are clean. And in terms of cleanliness, while everything that you mentioned are cleaner than the normal standard ICE engine, but electric vehicle is the limit in a sense that they have zero tailpipe emission. And therefore, for government to say that I'm putting thrust on electric, I'm not against anything else. I'm not against anything else, but this is a choice made by the government that they want to put all their thrust on electric vehicle and biofuels. And for whatever reason, they think that hybrid should not be supported. If they support it, I'm happy. If they don't support it, we align and we say we focus on electric vehicles.
The only concern is the kind of job losses that could entail. I mean, at least in the near term, if we drastically switch to electric.
I absolutely agree with you. It's very important to keep the pace of electrification in line with the pace of localization of electric vehicles. And if you go too fast, that the Indian industry is not able to localize both at the supplier side as well as the OEM side, then we will end up exporting jobs, which is certainly not desirable for the country, because jobs, as you said, heard earlier, that we need to provide 24 crore jobs. Was it 24? 2.4 crore. 2.4 crore, right?
And it's one of the, and auto industry is one of the multiplier effects are there when it comes to employment economy. So
absolutely.
It plays a very critical role.
So I think the regulators have to be very careful about ensuring that for one good thing, we don't create something else that becomes a problem. And I think everybody is well aware of it. And I know that for Government of India, jobs are very important, and they will not do anything which that will compromise with the job growth.
Right, so that was ET Now's Abhinava Das in conversation with Dr. Pawan Goenka to give us a slice of what this conference meant to him and what the future of the Indian auto mobility industry looks like. So he is joining us here right now, and he's no stranger to this industry. He's been to many conferences in the past, and he has been tracking many of the panels that we have seen today pretty closely. So Abhinava Das is here with us. Can you give us some of your top takeaways of what this conference means to the Indian mobility industry?
Well, Deepshika, electric vehicles was the core theme. I mean, if you look at the conference today, every company has been talking about how they're gearing up for electric, because that's something that is the technology of the future. And industry knows, every big company knows that unless they switch to electric over a period of time, they'll get extinct. And so this is something that the companies can ill afford. So everybody's gearing up. Look at the kind of investments that are being made. Look at the kind of money Maruti, Mahindra's, Tata Motors, they are pumping in just to make sure that they're relevant. But what is interesting here is, look for a company like Maruti, which is maybe for 53% of the market share today. For them to maintain that kind of a leadership is a huge challenge. And also, it's a big opportunity for companies which today have a very modest market share. So it could be a tectonic shift in a way for the industry. But if I look at the three top takeaways, one definitely is electric. That was the central theme for today's conference, and that's something every company knows that is one of the biggest challenges for the industry as a whole. Because if you look at batteries, the cost of the battery, it's a huge hurdle today. Although battery prices have been going down, but yes, they're still much higher. So in a way, what Dr. Goenka told me, that industry wants that kind of a government support incentive at least for the next 3 to 4 years. So that is one thing that the industry definitely wants from the government. And tomorrow maybe the Prime Minister will unveil the FAME 2, wherein he will give some sense of the kind of incentives that the government is looking to roll out. Number 2 is definitely GDP and how it could play a multiplier effect for the auto industry as a whole. And industry is very upbeat about it. Look at the first quarter GDP numbers of 8.2%. And third, and more importantly, is the kind of good monsoon we had that could really give a huge boost to rural demand. So two-wheelers, tractors, commercial vehicles, industry is very hopeful that the coming quarters could augur well because of the good monsoon.
Right, Abhinava. Thanks a lot for highlighting the top takeaways, the top learnings that all of us had the chance to witness in today's all-important session. But moving right on, like I said, we did catch up with a lot of important managements, and the rarest of them all was TVS Motors. We hardly, get to interact with managements such as TVS, and they did actually attend the conference and take time out to chat with us on the sidelines about what their product pipeline is looking like, what are the segments they're betting on, and what is their most important focal point at this point of time. So let's go across to that conversation.
I think overall, if you look at, we have some very good brands in the last few years we have built. And recently the products, whatever we have launched, whether it is Apache 164V or N-Torque, the new scooter, both of them are doing extremely well in the market, and the customers are extremely happy. About 10 days back, we launched TVS Radeon. I think we are definitely confident that that will also do well in the market. We have many good brands, starting from the oldest moped to Apache, then Jupiter, Then we have HLX series, which we sell in the international market, and TVS King, the three-wheeler. So these are some of the best brands.
So that brings me to my next question. There have been launches across segments. There was a point when everybody was thinking that, oh, TVS is now going really big on the premium segment. Then you just launched the commuter vehicle segment just a couple of days back. The scooters are, of course, ongoing. So tell us, what is going to be your cash cow going forward that you're planning to really bet on, and that the analysts, the market can watch out for and actually bet on for TVS's growth?
I think India, there is a huge opportunity. India is growing. If you look at the two-wheeler industry in India has been growing at least 10% CAGR, and we expect that to continue because there is good mobility needs in India. And if you look at, we have a very healthy combination of motorcycles, scooters in India. So definitely this is one market where we would like to grow ahead of the industry, and we have to have products for all types of customers, starting from young people to self-employed, to those people who want the convenience. So TVS, the strength of TVS is very good R&D.
Right, so that was ET Now's Karnya Rao in conversation with TVS Motors, a rare face. We don't have him on the channel as often. So now we are going to go on to a break. See you on the other side.